Alright, kita sambung kepada topik perbincangan kita pada hari ini on the chapter 1, which is on the accounting environment and business. Okay, course learning outcome that relates with this topic is course learning outcome number 1, explain accounting principles and the role of accounting reports. And program learning outcomes number 1 also relate to this chapter, which is interpret the theories and concepts of business administration in the field of financial services. Okay, apart from that, course learning outcome number 4 also relate with this topic, which is explain the importance of ethics in accounting. And together with the program learning outcome 11, which is demonstrate professionalism traits in accordance to ethical and legal practices. Alright, this is for the overall that after this topic, you should be able to fulfill all the course learning outcome number 1 and number 4. Alright. Okay, this is the learning objective for this chapter. After you have studied this chapter, you should be able to first explain what accounting is about. You must be able to explain what accounting is about and briefly describe the history of accounting. Okay. Apart from that, you should be able to explain the relationship between bookkeeping and accounting. Okay, what are the relationship between bookkeeping and accounting? And then you must know what are the main users. Who are the main users of accounting information and what are accounting information that are interested in. So that from the users, firstly, you should know who are the main users of the accounting information. And then before you know who are the main users, you must know what the accounting information that the users are interested in. Alright, next, continue with the learning objective number 5, which is describe the main difference between financial accounting and management accounting, so that before you able to interpret the differences between financial accounting and management accounting, you should know first what are the meaning of financial accounting and management accounting. Alright, number 6, describe the nature or types and characteristic of business activities. Right, you must know on many types of organization, and from the many type of the organization, you must know what are the nature or types and characteristic of business activities. Okay, apart from that, you should able to explain on underlying principle of accounting. So under the principle of accounting, you must know what are the basic principle that must be applied in order to prepare the financial statement that we learned before. Alright, for the 8th learning objective is describe the assumption which are made when recording accounting data. Alright, in this assumption, okay, this assumption is very important when you want to record accounting data, right? Okay, next, we go to the objective number 1. What is accounting? What is the accounting? All right, accounting can be defined as the process, okay, the process of identifying, measuring, and communicating economic information to permit informed judgment and decision by users of that information. Before this, I also give you what are the process that you must follow in order to prepare in financial statement. So the process that involved in preparing financial statement cannot be simply do, but you must follow. Firstly, you must identify, and then secondly, you must measure, and thirdly, you must communicate. So you cannot replace between identify to communicating, or you also cannot replace measuring process with identifying. So you must follow the process exactly. Okay, you must follow identifying process, and then followed by measuring process, and then lastly with the communicating process. So from process by process, at the end you should be able to prepare the financial statement. All right. What are the history of accounting? Accounting began because people needed to. Every history, okay, have their own aim. And what are the history beside anything that you learn, right? Because example, for this history of accounting starting because people needed to first record business transaction. Okay, from the needs, okay, of the one of the organization that you form, you must record it business transaction. All the business, okay, all the transaction that involved in the organization must be recorded. Okay, because if we not unable or cannot record the business transaction when the transaction occur, it may reflect your financial statement. Okay, know if they were being financially successful and know how much they own and how much they owed. Right? In accounting, when we do some recorded, okay, in types of accounting data and so on, so from the accounting record, we do the financial statement or financial statement analysis, and from the financial statement, third party will know the financially situation of your company, either in successful situation or vice versa. Okay, apart from that, know how much they own and how much they owe. From the financial statement, it consists of comprehensive of learning profit and loss account and the statement of financial position. You can know how much the company owns from others, okay, or how much the company have asset in their organization, or you may know how much the company owed or have their loans with other third party. Okay, so this is because all this reason become from the history of accounting, right? This is the objective number 2, also on the history of accounting. Accounting has existed for at least 10,000 years, okay, with yearly records indicating its use in Mesopotamia. Mesopotamia is the one of the pioneer on this accounting record. Okay, the pipe rolls is the earliest system in England, but the first system that referred or focus on the accounting is the pipe roll system that implement in England, okay, which is on this pipe roll system, okay, used for annual descriptions of rents, fines and taxes due to the king. It's related with the king, okay. Apart from that, double entry bookkeeping was first used by an Italian firm in southern France in 1299. Okay, this is the history of accounting. Okay, double entry bookkeeping is the equation of accounting. It is in accounting, when you want to record one transaction, you must do the double entry. Means that one side increase and one side decrease, or one side increase, one side increase. Debit side increase, maybe debit side also increase. Debit side increase, debit side decrease. Okay, it must be equal to same figure. So let's say debit side increase 5 ringgit. So credit side also increase 5 ringgit. So debit side equal to credit side. First situation. Second situation, it may be debit side increase by 5 ringgit, credit side decrease 5 ringgit. So equal to 0. So both are equal. The third situation is maybe debit side decrease 5 ringgit and the credit side increase 5 ringgit. So both are equal. So this is the example of double entry bookkeeping. Alright, we continue with the what are the nature and objective of financial accounting. Okay, in financial accounting, we have a primary objective, which is to provide information for decision making. Okay, let me say before, from the financial statement that we prepared, we also known what are the financially successful of the company. And apart from that, from the financial statement, we also able to do the decision making either to involve in the company or not. Okay, because the primary objective for financial accounting itself is to provide information for decision making. Alright, financial accounting, what are the financial accounting concerned? Financial accounting is concerned with how accountants use bookkeeping data. Okay, financial accounting is therefore concerned with first, record data. This is the process number 1, and then followed by process number 2, which is classifying and summarizing data, and then followed by process number 3, which is communicating what has been learned from the data. So financial accounting only process or concern on how an accountant use the data that record in the bookkeeping. Okay. What are the objective of financial accounting? This is in form of question. Let's say if you want to decide to involve in one organization, you should be able to answer all the questions from the financial statement that prepared by the accountant. Okay, for example, you should be able to answer the question, is the business making a profit or loss? So let's say if you want to involve in the one organization, in an organization or in a business and so on, okay, before you decide to involve, answer this question on, is the business making a profit or a loss? So you can refer this answer in the profit and loss account, right? What is the business worth? You can see this answer in the statement of financial position. What is the transaction worth? How much cash is in the business? How wealthy is the business? How much is the business owed? How much does the business owe? Okay, keeping a financial check on activities. All the question you must ask. Let's say you decide to involve in one company or one business. So before you join in the company, in the organization, this is the important question to ensure that during your process in doing the transaction with the organization, you can get win-win situation between the company and for you itself as a, maybe as a partner, maybe as a shareholders or investor, right? All right, we go to the objective number 3. What is the bookkeeping? Okay, bookkeeping is the process of recording data relating to accounting transaction in the accounting books. Okay, if the question asks you to explain on what is the bookkeeping, the important words that you must to include in is in the accounting books. Okay, the important words you must include it in, but you must proceed with the process because bookkeeping is the process of recording data. What are the data that you must record relating to accounting transaction? Okay, where you want to record your accounting transaction, you must be recorded in the accounting books. Right, this is the three words that you must include in. Let's say you want to explain what is the bookkeeping, right? This is the objective number 4. Who are the users of accounting information? Okay, managers. Of course, managers usually refers the financial statement in order to know how the condition of their business. Owners of the business. Sometimes the managers and the owners of the business is the same person. So apart from that, a prospective buyer, let's say you want to sold your business or you want to sold your organization to other people, to third party and so on. So that as prospective buyers, let's say we are the prospective buyers, of course, we use the accounting information to know how successful the company manage their business or how much their asset, okay, how much their loan and so on. So these all information, okay, as known as accounting information that can give you the information either to buy the organization or business or not. Okay, apart from that, the users of accounting information is the bank. Okay, if you want to operate or you want to expand your business, okay, in the next stage or in the next level, maybe you must have the huge capital, and then in order to get the huge capitals, you can get from the bank. So inside of bank, okay, from the side of bank, bank must refer on your accounting information in order to decide to give your lends their money or not. Alright, next, tax inspector. Alright, tax inspector also use the accounting information in order to calculate what are the amount, okay, how much that the company should pay in terms of tax. Because tax only paid if the company receive income, okay, during their operation or a year based on the time period that the company said to prepare their financial statement. Okay, apart from that, a prospective partner, okay, let's say one company, one business want to invite more partners in their business. Maybe a type of organization is partnership. So they want to other partner to involve their organization. So as a partner, let's say we want to be a partner for business A. So before we decide to join as a partner for business A, we must to investigate either the company is good condition or not, which referred into the accounting information. All right. Apart from that, investor, okay. Let's say you want to invest in the company, you have money to invest. So before you decide to invest or not, you must refer to their financial statement, maybe refer on the annual reports, on the what are the price of market stock market, or what are the price for common stock that the company offered now, because the current price of the stock market or market stock, which is common stock or preference stock, shows how the successful the company now, right? Apart from that, it's a creditors. Okay, creditors like a bank. Let's say we as a third party, our friend have their own business and want to borrow some money or other asset from us. So before we decide to give your friend to borrow your money or your asset and so on, or rent your building, rent your car, or rent your vehicle. So you must get the information on, is it your friend able to pay their rent, pay their money that they borrowed, and so on. Okay, this is about the uses of accounting information. We go to the objective number 5, the 2 branches of accounting. All right. In accounting, have 2 branches, which is financial accounting and management accounting. All right. Usually, this part is asked you to make the comparison or the differences between financial accounting and management accounting. So that before you make the differences, what are the differences between financial accounting and management accounting? You should know what are the meaning of financial accounting and what are the meaning of management accounting. So that for financial accounting is performed for the owners. Okay, perform for the owners. Used to show them how much profit has been made and what are the business is worth. Okay. While for management accounting, produce reports that help managers plan and enable them to control the business. So that in order to do the management accounting, which is produce reports, an accountant that manage their report must refer with the financial accounting that prepared before. Okay, before do the reports, produce the reports on planning and control on the business, report must be referred to the financial statement. Okay. The 2 branches of accounting as continued. Financial accounting concerned with what has already happened, assessing performance and considering where we are now. It is because financial accounting focus on the financial statement. So everything that appear in the financial statement is already happened. And then from the financial statement that already records, okay, we can know what are the performance and also considering where we are now. But in management accounting, interested in explaining what has happened and in looking into the future. So as we learned before, in financial accounting, we prepare on the financial statement. And then in management accounting, from the financial statement that prepared by accountant. So management accounting part do the reports, okay, to explain what was happened, okay, with the data on the financial statement, and also do some reports in looking into the future. Maybe some future plan to improve their business or future ideas in order to expand their business and so on. Okay, this is a differences between the financial accounting, management accounting, and also the relationship or interrelated between financial accounting and management accounting. All right, so we go to the objective number 6, which is on the underlying principles of accounting. We have some principle of accounting. Okay, for the number 1 is historical cost. Okay, dalam bahasa kita dipanggil sebagai kos sejarah. The historical cost concept requires that assets are normally shown at the cost price. Okay, when we want to prepare the accounting record or accounting transaction, in order to prepare the financial statement, we must record assets, okay, with the figure must be referred to the cost price, not the current price. Okay, cost price is the basis for valuation of the asset. Why we must record asset in the cost price? Because, okay, when we want to do the comparison, either the asset is able to create the profit or not, we must compare the value of asset for the cost price at the first date when you buying the asset with the current price. So you must get the, either you get the profit or you may get the loss. Okay, in order to do the basis for valuation, you must focus on the cost price. Okay, the second underlying principle of accounting is money measurement. The money measurement concept requires that accounting information is traditionally only concerned with the fact that it can be measured in monetary units, and most people will agree to the monetary value of the transaction. Alright. As we know, okay, if we want to prepare the financial statement, we want to record in the monetary units, so that when you want to disclose or when you want to answer the question from the third party, what are the assets that you have in your business? Okay, you cannot answer, I have 5 vehicles, I have 5 cars, but you must answer in the monetary units. You must value your asset, and then you must record it, your asset with the cost price in the statement of financial position. Okay, because in order to know whether your company in goods condition or profit situation or losses, okay, you may comes out with the amount of profit, how much, okay, and the amount of losses. Okay, you cannot just simply announce, okay, your company is lost without know what are the values of your losses and what are the values of your profit. Okay, we go to the next principle of accounting, which is on the business entity. Okay, the business entity concept implies that the affairs of a business are to be treated as being quite separate from the non-business activities of its owners. Therefore, items recorded in the books of the accounting are books of the business are restricted to the transaction of the business. This is the principle that must understand and must explore by all individuals that want to create their own business. Okay, this problem such as we have a personal intention in our business. We form a sole proprietorship business. Okay, we form a sole proprietorship organization. Okay, you must separately record your business transaction and your personal matters. Let's say you go to the store, online store and so on, you want to buy something, okay, the bill must be separate between you're buying for your own purpose and you're buying something for the organization or for your business purpose. You cannot simply mix it. Okay, bill for personal combined with bill for business purpose, you cannot combine. It is because in accounting, okay, the principle of accounting is very important, and one of the principle of accounting is business entity. Okay, you should separate it. Okay. Okay, the next principle of accounting is dual aspect. The dual aspect concept states that there are two aspects of accounting, one represented by the asset of the business and the others by the claims against them. This concept can be summarized by a form of the accounting equation. Okay, as we learned before, okay, in order to do recording transaction, okay, records of your transaction, you must know what are the accounting equation. All right, assets equal to capitals plus liabilities. So from this equation, you will be able to record the transaction, either to include in the debit side or include in the credit side. So beside this accounting equation, your record transaction may be not totally right. Okay. This is the next principle of accounting, which is on time interval. The time interval concept requires that an entity will prepare financial statement at regular intervals during the year. Okay. This principle informs us that all the organization must prepare their financial statement, okay, on a regular interval during the year. Okay, it is based on the organization, okay, and also based on the which type of organization that the company that we form. Okay, let's say we form a sole proprietorship, so you must follow the security commission. Let's say we form the partnership, so you must follow the partnership act. Let's say you form a corporation or corporate form, you must follow the Companies Act. So let's say if you form the partnership, you must follow the Partnership Act. That maybe in the Partnership Act requires you to prepare financial statement quarterly, so that every 3 months you must prepare one financial statement. Let's say from January until March. So one financial statement. You must send your financial statements to the company or to the organization or bodies that you registered in. Okay, let's say you registered your sole proprietorship with Security Commission. So maybe Security Commission decide for you to prepare the financial statement based on the quarterly. So every 3 months you must submit to the Security Commission. So maybe some act states that you must prepare based on the yearly. So at the end of December or at the end of November, so regarding what time of your business starting. Let's say your company or your organization start on 1st March. Okay, you must submit the financial statement maybe at the end of February next year. So to be 12 months, to be 1 year, alright? So this is time interval. So we go to the next on the underlying accounting concept. Okay, before this we learn on the underlying accounting principle. For objective number 7, we go to the underlying accounting concept. Okay. Okay, under the IASB, okay, IASB is the framework or standard that prepared by the international, okay. Okay, refer to IASB conceptual framework lists 2 assumptions that must be applied if financial statement are to meet their objective, which is the accrual basis, also called the accrual concept, and the second is the going concern concept. Alright, these comprise a set of concepts considered so important that they have been enforced through accounting standard and or through the Companies Act. Okay, as a general information, if you refer to the IASB, one of the standard that used by the international standard, okay, the accounting concept that you must apply if you want to prepare the financial statement to ensure to meet their objective, you must prepare the financial statement by using the accrual basis or called the accrual concept, and you must apply the going concern concept. Okay, this is a general accounting concept referred by IASB. But right, under the Companies Act, okay, Companies Act enforce 5 accounting concept, okay, compared to FRS 5 that enforce 6 accounting concept. So in this part, actually, usually the question asks you what are the list all the accounting concept that enforce under the Companies Act, and also what are the accounting concept that enforce under the FRS 5. So you should know all the accounting concept that considered under the Companies Act, and you must also know what are the accounting concept that under the Companies Act, right? So that refer to the Companies Act that have been enforced 5 accounting concept, which is going concern concept, consistency concept, the prudence concept, the accrual concept, and the separate determination concept. This is referred to the Companies Act. But if you refer to the FRS 5, the accounting concept are the going concern concept. Same goes to the Companies Act. The consistency concept also same to the Companies Act. The prudent concept, the accrual concept, and the separate determination concept, all the first 5 is same to the Companies Act, but okay, in FRS 5 also have the substance over form accounting concept. Alright, this is the differences between the accounting concept referred by Companies Act or by FRS 5. Okay, so for this class, I also focus on the the going concern concept and the accrual concept. Okay, because these 2 concepts is focused under the IASB conceptual framework. So what are the accrual basis? Okay, what are the accrual basis concept? The accrual concept states that the effect of transaction that other events are recognized when they occur and they are recorded in the books and reported in the financial statement of the period to which they relate, and this allows income and charge relating to the period to be taken into account by matching the income with the expenditure. As a general, as we learned before, accrual basis is someone that want to buy with our business, buy inventory or buy goods in accrual basis so that they decide to pay by monthly or maybe by quarterly, okay? In time period must be agreed by both parties, and the amount that they should pay is referred to the agreement, okay, that's set by the both parties. So let's say, for example, my organization or my business sold the glove, okay. Let's say Ahmad want to buy glove from my business or my organization, okay, but Ahmad don't want to pay or don't involve, cannot or don't want to do the or apply the cash basis, but he choose the accrual basis. So with the accrual basis, okay, in order to record the accrual basis transaction, okay, I should record in the date that the inventory out from my business. Let's say I might choose to pay monthly, okay, by 100 ringgit, let's say. So that today my inventory also sold to the Ahmad. So in this date, I must record it. Okay. I must record it, the transaction that prove my inventory is already sold. Okay. But the transaction to record Ahmad pays their loan or their values of buying our glove, it must be recorded monthly by 100 ringgit. Let's say January. So in January, you must record it 100 ringgit to matching your income and you receive money from the Ahmad. So that is the accrual basis concept. So that the second concept is going concern concept. The going concern concept assume that the business will continue to operate for at least 12 months after the end of the reporting period, and this concept should only be ignored if the business is going to close down in the near future or if a shortage of cash makes it likely that the business will cease trading. Okay, for this accounting concept is going concern. Okay, let's say our business already operates in 5 years, let's say. Alright. How the going concern concept will apply in our accounting concept? Okay, going concern concept will apply in our financial statement. Let's say we assume, okay, going concern concept will apply in our financial statement or our accounting record if, okay, if the accountant can assume that our business will continue to operate for at least 12 months after the end of the reporting period. Okay, if the company decide to close down their business in their near future, okay, means that not intention to proceed our business for at least 12 months, this going concern is ignored in order to do or prepare our financial statement. Okay, this is a learning outcome for this topic. Okay, you should have now learned on, okay, this is the accounting. What are the meaning of accounting? This part is what are the meaning of accounting. Okay. Second is the history of accounting. Okay. Next is the uses of the accounting data or accounting information. And then, okay, what are the function of accounting information in order to do the plan for the future? Okay, the meaning and the differences are interrelated between the financial accounting and management accounting. And then we also learn on the what are the underlying principle of accounting. So we have historical cost, money measurement, business entity, dual aspect, and time interval. Okay, you must know the details on each of the principle of accounting. Okay, so we have 1, 2, 3, 4, 5. We have 5 principle of accounting. Okay, apart from that, we also learn on the accounting concept or accounting assumption. If the question asks you what are the accounting concept or accounting assumption, this is the same meaning. If the question asks you to list all the accounting assumption, the answer is same. What is the accounting concept? Okay, the two main accounting concept that apply in IASB, also in the Companies Act, also in the FRS 5 is the core basis and going concern concept or basis. Okay. We go to the, alright, this is the, that's all for this subtopic. Any question? You have a question?